Ever wish you could invest in real estate but thought it was out of reach? Fractional real estate investing might just be your ticket into the property market. Stick around and learn how you can start with just a few $100s and see substantial returns. In this video, we've put this to the test to see if the hype is true and if it's as good as investing directly in real estate. So why listen to me? With over a decade of experience in marketing, advertising, including collaboration with a lot of well-known personalities like Kendall Jenner, Kevin Jonas, I've developed a decent eye for identifying lucrative opportunities. And as a devoted father and husband, and obviously a Christian, I understand the importance of managing resources wisely, securing a bright future for my family, and of course, honoring God. Hey, welcome back to the channel. If you're new here, my name's Jay. Today, we're diving into the exciting world of fractional real estate investing. By the end of this video, you're gonna know exactly how to get started, what to watch out for, and how to make the most of this very particular investing strategy. Before we dive into fractional real estate investing, let's take a quick look at the current real estate market. So I was taking a look around and potentially so that I can invest in another property, but right now, the market is crazy. Some of the homes are so overpriced. According to recent statistics, the average price of a home in the US has surged by over 20% in just the past year. I was taking a look to see if I can get another rental property, and my goodness, the homes are so overpriced right now, specifically because inflation is hitting record highs and loan interest rates are climbing. It's becoming increasingly challenging for many people to just afford to buy a property. In 2023, the Consumer Price Index reported an inflation rate of over 5%, significantly impacting the cost of living and borrowing. Now, there's a lot of reports that states that inflation is actually in double digits and a lot higher than it seems. So we kind of have to just take some sort of median here and pick a range. Whatever it is, whatever they claim the percentage is, it definitely feels like it's a lot more. Of course, the higher the inflation, the higher the rates for borrowing any type of money. Mortgage interest rates are now at an average of 6.5%. making home loans more expensive, of course, and drastically reducing our purchasing power. This financial landscape has made traditional real estate investments more and more daunting, with higher down payments, higher mortgage rates, higher property mortgage insurance, and of course, all of the risk associated with property management continue to be significant. As a result, there's a lot more investors looking at alternative ways to enter the market without the upfront cash and all of the upfront risk, ongoing responsibilities, and lack of stability. So for instance, the National Association of Realtors highlighted that the first-time home buyers now need to save for over 70 years to just afford a down payment on the medium price home, not their dream home or forever home, just an average home. The increasing costs and financial strains are pushing many towards more affordable and flexible investment options, exactly like this fractional real estate investing. So if you're wondering what exactly is fractional real estate investing, all it does is it takes one property and allows investors to buy a little bit of a share of that property. It gives them partial ownership, kind of like a stock, right? Unlike traditional real estate, where you need a significant amount of capital to just buy the whole property. And if you're not going to do an FHA or a traditional loan, an investment property, you actually need even more money and even more capital and even, more cash flow. Fractional investing actually lets you start with an infinitely smaller amount. Some companies allow you to start with 1,000 and some even less. By the way, we're going to cover all of these websites and the properties that they offer later in this video, so stick around. But what this does, it allows you obviously to benefit from all of the returns, all of the upside, and fractional real estate investing has drastically evolved over the past decades, of course, with all of the technology and the increasing demand for accessible investment options. Historically, real estate syndication groups like, obviously Grant Cardone and many others allowed investors to pool their funds and buy a large, multi-home property, multi-door property. Today, all of these modern platforms have streamlined the process, making it infinitely easier and reducing the barrier of entry to individual investors who participate with minimal hassle, right? So before you had to be an accredited investor and go through this long, arduous process, now you can actually sign up and get started very quickly. So let me give you a use case. If you invest $10,000 in a $1 million property, you own 1% of that property. This share entitles you to 1% of the rental income property appreciation, and obviously tax depreciation in some cases. Now, it's not everyone that passes the depreciation off. Make sure that that's something you look at, and we'll talk about later in this video. It's essentially a straightforward way to get involved in real estate without needing a large amount of upfront capital. So how this all essentially works, you go to a website, you look at a property. Most of these platforms will give you the numbers on, cash and appreciation percentages. And these are all estimates, right? But how much income it's going to make, what are the costs, what are the taxes, etc. They typically handle the property management for you. And if something needs to happen on the maintenance side, or they need to change the tenant because of, collection or whatnot, there is usually a vote that happens, and each person, based on the amount of shares that they have, get to vote, and their vote carries as much weight as they essentially own, if that makes sense. You might be wondering, is fractional real estate investing, fractional real estate investing. Can you say that 5 times without twisting your tongue? Because I'm getting a little tongue-tied here. So the first question, and obviously the main question, is fractional real estate investing as lucrative and effective as traditional real estate? Most of you know that most millionaires here in the US become millionaires through real estate. So is this a fractional way to do it? Let's look at the pros and look at some of the cons. So obviously the pros is lower entry cost. You can start investing with a much, much smaller amount. So the barrier of entry is a lot lower. The second one is diversification. Investing in multiple properties can actually spread the risk and increase stability. This is the equivalent of investing in an individual stock versus an ETF. The third, access to high value properties. Before, if you only had $20,000, $30,000, $40,000, you can't actually get into a high access property. But with this, you can actually own shares of prime real estate that would otherwise be completely out of reach. Of course, in both use cases, you have passive income from the rental, which is managed by the platform, but provides a steady stream of passive income. And the same thing, just like traditional real estate investing and fractional real estate investing, capital appreciation, which is, the potential for the property value to just increase over time. Now, let's talk about some of the cons, because none of this is without any risk. Obviously, just like traditional, there are market risks where the property value can not only fluctuate, but actually drop and impacts your returns significantly. The second one is liquidity concerns. Selling fractional shares are actually not nearly as quick as selling a traditional property. And we all know that selling a traditional property is no joke. That's gonna take some time, it takes some consideration. Now imagine doing that of a fraction of a property where most people may not even wanna buy a minimal share. They wanna either buy a whole property, and this isn't as popular as traditional real estate investment. Management dependency. So obviously your investment success is tied to the platform's efficiency of managing the property. The way that this typically works, and I learned this when I was working for Grant Cardone, Grant would actually buy these properties, and then he would let people buy a share of it or a portion of it. But there was a fixed contract where you had to use his company to manage the property and all of the legalities. So you're ultimately tied into that management property. If you're doing this in traditional real estate and you have a bad management property or property management that's too expensive, you can fix that. With this, you really can't, because again, you're tied in to the platforms and the way that they manage the properties and the fees that they charge for management, and so on and so forth. Another big con about this is obviously the legal and regulatory issues. So different regions have different varying regulations. If you live in a different state or county or city, etc., you're not going to dive in and look at all the research about this, but ultimately you're making sure or trusting that the portal that you're going to be using, the platform you're going to be using, is doing their research enough and not crossing any lines that could jeopardize your investment. Overall, while fractional investing has its risk, many find it very lucrative and a great way to diversify their portfolio and gain some exposure, of course, to the real estate market without the direct headaches of ownership. Experts often recommend fractional investing as a supplemental strategy to traditional investments, almost like an alternative investment, which, by the way, if you're curious about some other alternative investments, I have an entire video on that. Feel free to click and watch that above, but it allows you to benefit from the real estate market stability and growth potential. If you're in the market now, either to buy your first property, an investment property, or getting started with fractional investing, make sure you watch my video on how I almost lost $122,000 on a real estate deal. Go check that out. So here are some of the top platforms for real estate investing.
Hey guys, so like I mentioned, there's only 2 or 3 of these that I think are worth really checking out. Fundrise is one of them. I used to be a customer, but then like it was so tricky to make any money. I mean, let me see here. Yeah, I was a customer before all of this. So I mean, you can see if you were a customer from 22 to 23, you actually would have lost, 6.5% on your investment, and they haven't really done much for Q1. I mean, you're better off just being in the S&P 500. So you really got to take a look at if it's worth it or not. But I do want to walk you through an investment and what that kind of looks like on Fundrise. There is a company that I actually like more than Fundrise, and this is Fractional Real Estate Investing. Same thing. The biggest difference with this one is that they tokenize these properties, and you're essentially buying it with crypto. So you put money into your wallet, convert it into crypto, and then you use crypto to buy these properties. The biggest, I think, plus side on this versus Fundrise for me is that you can invest with a lot less money. So you can see there's tokens for a property here at $48, $41. We can also look at, well, let's look at an example. Well, this is a commercial property. It's been around for a while. I don't know why it says new listing. I've been looking at this for a while, actually, like 6 or 7 months, if I'm not mistaken. It gives you a pretty good idea here on all of the numbers that you would essentially need, and it also gives you a calculator. So if you spent, let's call it, can I get to five? No, I can't do $5,000. So if you get, close to $5,000, assuming the same appreciation, same cash on cash return, then this is how much money you would make on this specific property if the market holds up and trends, as it has been. Total investment in 30 years, total return in 30 years is 19,000. In 5 years, 7,000. Now, this is not, bad in any way, shape, or form. If you were to buy, this property outright, what's the value of the property? 2.8 at 20%. So it won't actually allow it. So let's just assume we could do it 10%. And you have an idea. 244. If you were to actually buy this property with 10% down payment, this is what your ROI would be, which is actually, not bad, but it's not great. On a $250,000 investment. So you can look at other properties that have better yield. Of course, as you get more and more specific, the more expensive the property is going to be. These are insane. The other cool thing that Lofty does is it does allow you to sell tokens. So your liquidity on this versus Fundrise is infinitely better. You see that this property, one of the reasons that the cash flow is so high is because it's an Airbnb property. Actually looks gorgeous. Look at me doing free advertising here for Lofty. The other thing that they do that is interesting, I'm going to pause this for a second. So Lofty does allow you to vote on what's going on with specific properties. So you can see that I got this update back in June, so a couple of weeks ago, and it tells us exactly what's going on. So this investment is not going great. It's a multi-unit, obviously a triplex. And the first tenant, it owes a balance of 10K, the second one of 9K. These guys aren't going to court. There's been an eviction order. It doesn't look like it's going properly. Meanwhile, we are, as a collective, everyone who bought tokens into this property, we have to keep paying the loan and keep paying the mortgage, etc., while these guys are not paying rent. So it's at the point where it's going to end up costing money and we're not going to make the return on it. And then the other really cool thing about Lofty is that they pay their rents daily. So I'll give you an example. You literally earn the rent today. You get daily rent payouts that are added to your account. Now, you're buying fractional real estate and you're getting 1/30th of the daily rent, of the monthly rent. So it's not like you're making hundreds of thousands of dollars here unless you invest a ridiculous amount. But you do get it, every single day you can kind of see your portfolio climbing. So it's pretty interesting and a good way to dip your feet into this water. So anyways, you guys check it out. If you're already using Lofty or another platform, let me know what you're using. I'd love to check it out.
One that's an up-and-comer is Realty Mogul, which offers both residential and actually commercial properties. Realty Mogul provides detailed property analysis and performance metrics, helping investors make informed decisions. Yield Street, by the way, guys, I've actually used Fundrise a while back and I pulled my money out because the ROI was just so slow, but this was a couple of years back. I have tried Yield Street. Yield Street platforms includes alternative investment options such as, obviously art, marine finance, and it allows for a secondary diversified portfolio. So in summary, fractional real estate investing offers obviously a unique and accessible way to enter the real estate market with a much lower cost of entry, increased diversification, and potential for passive income. Definitely an option worth considering. I'm curious to know, guys, if you've already done fractional real estate investing, would you let us know below how it's going? How is your investment doing? Maybe what state are you in and kind of what's your take so far? I'd love to hear about it. Drop that in the comment below. And of course, subscribe to the channel. Appreciate you guys, and I'll see you on the next one.